Imagine walking into a grocery store where every price tag feels like it shifted overnight. Not dramatically, but just enough to sting. A few cents here, a few rupees there. Small changes that don't announce themselves, yet quietly force you to rethink your budget. And here's the uncomfortable truth no one wants to admit. No one can fully explain who caused those prices to rise. Not your government, not your central bank, not the corporations adjusting their margins, not the economists arguing on television. Everyone claims to control inflation, yet inflation behaves like a living creature, moving in ways that don't follow the instructions written for it. Inflation is no longer just a number. It has become a force that bends economies, reshapes politics, and twists public expectations. People used to ask, why are prices going up? Now they ask, will this ever stop? But the more uncomfortable question hiding underneath is simple. If central banks are supposed to control inflation, why do they keep missing their own targets? To understand the truth, we have to abandon the myth that inflation is a clean equation controlled from a single command center. It isn't. Inflation is messy, layered, and driven by forces that rarely agree with one another. We're told it begins with interest rates. Make money cheaper or more expensive, demand recess or falls, and prices adjust. That's the textbook version. In the real world, incentives collide. Businesses react unevenly. Consumers panic at strange moments. Governments bend their own rules. Central banks, the so-called grown-ups in the room, discover that raising interest rates doesn't directly reduce prices. It reduces activity. Borrowing slows. Bending tightens. Pressure builds. And only then does inflation cool down. That isn't control. That's negotiation with a stubborn opponent. Because inflation isn't controlled by one pair of hands. It's a steering wheel grabbed by governments, central banks, corporations, global markets, and ordinary people all at the same time, each pulling in a different direction. When governments spend more than they collect, they fill the gap with borrowed money. That money quietly enters the system and increases pressure on prices, even if no one notices at first. Officials say they don't print money, and technically they're right. They borrow it, inject it, and hope the math behaves. Central banks set interest rates, manage liquidity, and try to guide inflation like a pilot flying through turbulence. But even they admit they don't fully control it. They only influence it. Because while they push in one direction, the world pushes back in another. Corporations raise prices to protect their margins. Global markets suffer sudden shocks. Consumers begin hoarding because they fear tomorrow's prices. Inflation turns into a psychological loop. When people expect prices to rise, they buy early. Early buying increases demand. Higher demand pushes prices up. Inflation becomes a self-fulfilling prophecy. Corporations aren't villains. When supply chains break or demand surges, they adjust prices to survive. But when inflation dominates the news, companies logically take advantage of expectations. Not illegally, not immorally, simply rationally. Because people tolerate higher prices when they believe everything is getting more expensive anyway. Global markets add another layer of chaos. A drought in one country raises wheat prices worldwide. A war drives up oil costs. Shipping delays, increased transportation expenses. The price of bread rises not because of local policy, but because wheat futures spiked thousands of miles away. And at the center of it all are ordinary consumers. Their fears, expectations, and habits shape inflation without them realizing it. When people rush to buy before prices rise, they unintentionally push prices up faster. When they pull back, inflation slows. Inflation behaves like a crowd reacting to a rumor. No single person starts the panic, yet everyone participates. The uncomfortable truth is that inflation isn't controlled by a single entity. It is shaped by relationships between supply and demand, governments and deficits, corporations and pricing power, central banks and credibility, and consumers and fear. Every group believes it's in charge. Governments think fiscal policy sets the tone. Central banks insist monetary policy is the key. Corporations believe pricing power rules all. Consumers think nobody knows what they're doing. But inflation moves through all of them, influenced by each, controlled by none. Think of the economy like a line of dominoes. Government spending pushes one, central bank decisions push another, consumer expectations push a third, global supply shocks hit a fourth. Sometimes they fall in the same direction, sometimes they fall against each other. That's why forecasts fail. Inflation isn't a single chain reaction. It's multiple collisions happening at once. When people say central banks control inflation, they oversimplify reality. Central banks don't control it. They negotiate with it. Even aggressive rate hikes can be overwhelmed by supply shortages, geopolitical crises, rising corporate margins, or consumer panic. The world is too interconnected, too emotional, too reactive for one institution to command prices. Beneath the chaos are powerful incentives. Governments want growth, which encourages spending and borrowing. Corporations want profit stability, which encourages pricing power. Consumers want predictability, but their fear creates volatility. Central banks want credibility, but credibility depends on trust. And trust, more than interest rates, is the real engine of inflation. When people trust the system, inflation behaves. When trust breaks, inflation becomes stubborn, sticky, and sometimes explosive. We are entering an era where inflation will move in waves, not just spikes, not just collapses. Waves driven by global instability, fiscal imbalance, shifting expectations, and political turbulence. The era where a central bank could simply set inflation at 2% is fading. Today, inflation responds to whichever actor shows the strongest conviction, whether that's governments, corporations, markets, or citizens. So the real question is no longer who controls inflation. The question is, who influences it the most right now? And the final, unresolved thought is this: if inflation is shaped by everyone, who will shape the next wave? And will they even realize they're doing it?